morning. In the last class, we have done types of cost or meaning of cost. What is the meaning of cost, expenses, all those things we have done. Okay. What is the meaning of cost? What is the meaning of cost? Simple. Value of resources given up for a particular objective. Okay. The objective, what is the objective? Objective may be manufacturing goods, or it may be for the purpose of selling the goods, or it may be for the purpose of rendering the services. It has more to do with than that of which one? Expenses. Clear. Expenses are nothing but amount spent, that is historical, but cost is nothing but today's value of resources. Whatever is the value of resources given up for a particular objective, that is what we have seen in the last class. We classify the cost, or we classified the cost based on two aspects. One is called as product cost, another one is called as period cost. What is a product cost? Simple. It is included in value of inventory. It is valued in the cost of the product, or you can say it is included in the value of inventory. Period cost are taken as expense in P&L account. So which is a period cost, which is a product cost, depends on the method of costing that you are following, that we are following. We'll discuss in detail about this. When a cost will become product cost, when a cost will become period cost, we are going to see in detail when we learn a concept called as absorption costing and which one? Marginal costing techniques. Okay. So in this class, we will see about classification of cost. How do we classify the cost? Okay. I request you to take up a running notes along with the class, maybe a skeleton notes or small notes along with the class. One is called as based on relationship. Simple. Two types of cost: direct cost and indirect cost. What is a direct cost? It is called as a traceable cost, or the cost identified with cost object. Cost object may be product or department, okay, or output. Sir, I can identify the cost, or I can identify the cost with an output or a batch or a product or a particular item. That is called as which one? Direct cost. For example, let us take the CMAOS classes. There are so many charges which the institute incurs. For example, there is a administrative people involved over here. We pay salary to them, and there is a housekeeping staff involved. We pay rent for the premise. We pay electricity charges, internet charges, system maintenance charges. So many charges we incur. In this, what is a direct cost? In this, what is a direct cost? Simple. Whatever is directly spent for this course is a direct cost. My salary may be a direct cost. My salary is a direct cost because for taking the class I am paid. That is a direct cost. Okay. The material charges or encryption charges, the online charges specifically incurred for this course, okay, CMAOS course, is a direct cost. What about administrative staff salary? What about the general staff salary? What about general rent paid, common electricity paid? Are they paid specifically for a particular course? No, they are paid for, all the courses together. We run Indian courses like CA, CMA, CS. Okay, for all those things, administrative people work. It is not that exclusively for CMAOS people work. Clear? So they are called as which cost? Indirect cost. Simple. They are called as common expenses, or costs related to two or more cost objects. Simple. Direct costs are directly charged on the product. I use the word cost object. The cost object can be a product or a batch or an output. Okay. So it is directly charged to the cost object. For example, in case of a college, let us take a college, there are different departments like computer science, commerce, electronic science, okay, physics, chemistry, botany, zoology, like that. If you look at the direct cost, the lecturer's salary, that's a direct cost that is directly charged to the cost object. What is the cost object? The department. Okay. If there is any laboratory expenses, colleges maintain separate laboratory for different type of students, and for some students, no laboratory required, like BA economics, history, or commerce, there may not be a laboratory required. So laboratory cost is directly charged to the concerned department. Okay. If there is a departmental activity like departmental culturals, departmental seminars, symposium, workshop expenses, they are called as which one? Direct cost, that is directly charged to the cost object. Indirect cost is like principal salary, general administrative people's salary. Okay, it can be a general promotion expenses, overall upkeeping and maintenance of the college. So those things are shared proportionately. Sir, which proportion? Depends upon nature of activity, what is the cost incurred, etc. You may share it based on number of students or based on revenue collected, based on time proportion. So indirect costs are shared. Shared. The best word to use is apportioned. Okay. Direct costs are traceable costs which can be directly charged. We call it as directly charged. Otherwise, we can say allocated. The word that is used for direct expenses are which one? Allocated to the department concerned or allocated to the cost object. The word that is used for indirect cost is apportioned. For example, rent paid by the academy. We share it on the basis of square feet of classes occupied. Okay. Cleaning and maintenance charges. We allocated based on apportion based on what? Number of students studying. Okay. Advertisement cost that is incurred common. Okay, we allocate based on the revenue or apportion based on which one? Revenue. So direct cost, no problem. You can directly charge to the concerned department. Indirect cost will be shared or apportioned. Please remember, customer will be charged both for direct expenses as well as what? Indirect expenses. Okay. So this is about based on relationship. Are they directly related or are they indirect or common to two or more department? We classify the cost under two categories. Direct cost and which one? Indirect cost. Let us take a garment manufacturing industry. In a factory where we manufacture different garments. Okay, the banian material, spun material, using that we manufacture banians or t-shirts, etc. We also stitch shirts, normally terracotta shirts or maybe like cotton club shirts, like that we manufacture. Okay, we are manufacturing kids garments, women's garments. Okay, so many things we manufacture. What is a direct cost? Cloth is a direct cost. And any cost that is incurred directly, like direct labor, who are engaged in designing, cutting, stitching, overlocking, okay, and ironing and packing, all those labor cost will be called as which one? Direct cost. Any specific cost incurred, like the packing material that is purchased for primary packing, okay, so those costs can be called as which one? Direct cost, because it is traceable. How much you spend for men's garment, women's garment, kids garment, okay, product X, product Y, Z, variety 1, 2, 3, 4, you can identify directly. That's why they are called as which one? Direct cost. Indirect cost, like factory rent. For factory, you pay rent, common electricity expenses, maintenance charges, electrician's charges, okay, general upkeep work charges, security expenses, production manager salary. They are called as which one? Indirect cost, because they are not devoting time and the cost cannot be directly identified with a particular batch or a product or output. They are called as which one? Indirect cost. So based on relationship, we classify the cost into direct cost and which one? Indirect cost. In this, what will become a product cost? What will become a period cost? We will see. Both direct and indirect costs are part of which one? Product cost. Some cost we will take it as what? Period cost also. Which one should be taken to product? Which one to be taken to income statement? We will come back to that separately. This is the first one. Based on which one? Relationship. Based on cost behavior. based on cost behavior, how the cost changes, how the cost behaves. Okay, maybe let me to go for drawing so that you will understand a bit. Let us take this side as cost side. Let us take this side as output side. Clear? Vertical axis cost, horizontal axis output, like that. What is the name of the first cost? Let the production be 0 or 5,000 units or 10,000 units or 15,000 units. Cost remains the same. They are called as fixed cost. This is also known as period cost. Cost incurred for a particular period that will not change according to output. That will not change according to output. Based on this, definitely you will get one or two multiple choice questions in IMA. That is called as which cost? Fixed cost. The cost that is not changing with output. This one you can find, if the output changes, cost also proportionately changes. When the output changes, cost also proportionately increases. This is called as which cost? Variable cost. Variable cost. Otherwise, it is called as a direct cost or variable cost. Anything that changes with volume of activity. The output can be sales. The horizontal axis is output. Output can be sales or volume of units produced or manufactured. So whatever changes according to output, we call it as which one? Variable cost. Can you give me an example of fixed cost and variable cost? Can you give me some examples of fixed cost and variable cost?
Day-to-day purchasing goods, variable cost.
Raw material cost is a variable cost. Labor paid based on piece rate. You are paying your workers based on output. How many units you produce into number of, rate per unit, like that. Then any other cost that changes with output. Any other cost that changes with output, that is called as which one? Variable cost. It will directly change with variable cost. If the output is 0, cost will be 0, like diesel consumption in the factory and the market. Example of a fixed cost. Best example is rent. You run the factory for 1 month or don't run the factory. You produce how many units you want. The rent is what? The fixed cost. Maybe the interest on borrowed capital. Finance charges. You borrowed 1 crore and started business. Whether you run the business or not, whether you manufacture the product or not, the interest cost will be what? Same. Okay. Certain fees payable to the government. Like every year you have to pay the renewal fees for your factory or running the factory, etc. That is called as which one? Fixed cost. Clear? So whatever that is not changing with output, we call it as which one? Fixed cost. We cannot avoid any of them. Variable cost definitely will come. Fixed cost is unavoidable. Both will be there. Both will be there. Look at this. Cost is not directly changing. Cost is not directly changing. There is a fixed portion. There is a variable portion. This is called as mixed cost. In India, we use the word semi-variable cost. A part of the cost is fixed and a part of the cost is variable. This is known as which one? Mixed cost. A part of the cost is fixed. For example, like $10,000, it is fixed per month. Then thereafter it is variable. If the output is 0 or 1 lakh units, the minimum cost is what? $10,000. When the output increases, cost also increases. That is variable portion. Whatever is increasing, that is called as which portion? Variable portion. This is known as which cost? Mixed cost. Can you give me an example? Many costs are like this. For example, electricity charges. Electricity charges. For factories, they ask you what is a horsepower, how many HP you want, or what is a kilowatt minimum you want. Okay, factory to factory, the minimum requirement will change. So, for example, I take with 20 kilowatt in India. 20 kilowatt in India, minimum charges will be 10,000 rupees bi-monthly. Minimum charges will be 10,000. Whether you use the electricity or not, minimum you have to pay how much? 10,000 for about 20 kilowatts. Okay. Then when I use electricity for production, depending upon how many units I use, multiply with 12 rupees or 15 rupees we pay. For example, for a particular month, let us assume month usage, okay, fixed cost and variable cost, and what is the total cost for electricity. Jan month, there was zero production. Fixed I have to pay 10,000. Variable cost will be zero. Total will be 10,000. In February month, I just used 10 units. This I have to pay 10,000. This will be like 10 into 15 rupees, like 150. 10,000, 150 I have to pay. In March month, I used, let us assume, 1,000 units. This will be 10,000. This will be 1,000 into 15. 15,000. And total will be like 25,000. So which portion changes? Only the variable portion will change. Okay, so fixed cost will remain the same. Variable cost will change according to the usage or output. That is called as which one? Mixed cost. Okay, even this cost you can find in factories. Look at the next one. 0 to 5,000 units. Cost is like $1 lakh. 0 to 5,000 units, cost is like $1 lakh. Then once if you produce more than 5,000 units, okay, the cost becomes like $2 lakh. Up to 10,000 units, cost is like $2 lakh. Up to 15,000 units, the cost is like $3 lakh. Like that it jumps. Cost that increases level by level. This is called as step cost. Step cost. Cost will not change for every unit. Cost will remain constant for a particular level. Then it will jump or move to the next level. For example, 0 units to 5,000 units, you spend $1 lakh yearly. 10,000, 5,000 to 10,000. I manufacture 5,001, 2 or 3 or 5 or up to 10,000 units. The cost is what? 2 lakhs. Then 10 to 15K, the cost is like 3 lakh. It increases by 1 lakh, 1 lakh, 1 lakh for an output interval of 5,000 units. This is called as which cost? Step cost. All these step costs are incurred which are related to capacity. Okay, these are related to which cost? Capacity. What is capacity? For example, for first 6 months, I find the demand for my product in the market will be 5,000 units. For that, I need one machine. I hire the machine or rent the machine or hire the machine. One machine can manufacture how many units? 5,000 units. For next 6 months, that is sufficient for me. So I will run with one machine only. So what will be my fixed cost? 1 lakh. Because one machine I pay rent 1 lakh. Okay, after 6 months, I find demand is increasing. Demand is increasing. It may be 5,500 or 6,000 or 7,000, 8,000, 10,000. I will do with one machine or two machine. Two machine. When I go for the two machine, okay, the rental will become 2 lakhs. Rental will become what? 2 lakhs for the two machine. With two machines, I can manufacture from 5,001 to 10,000. Then if I increase my output capacity more than 10,000, I need the third machine where my rental will go to $3 lakh per annum or per month, like that. So when you change the capacity, level by level, the cost will increase. That is called as which cost? Step cost. This is based on cost behavior. This is based on which one? Cost behavior. I request you to take up this. Based on this, lot of questions can be tested. Lot of questions can be tested. We'll see. First, I request you to take up this, then we'll proceed. So fixed cost, whatever may be the output, it will remain what? Same. Whatever may be the output, the fixed cost remains what? The same. And variable cost changes according to what? There is an error. Please take it up. Fixed cost like rent, depreciation on assets, interest charges remains the same. Whatever may be the output, fixed cost remains what? The same. Variable cost changes according to the activity. Variable cost changes according to the activity. Mixed costs do not start at zero. Mixed costs do not start at 0 point. They start at a particular level, thereafter it grows. Okay. Till this portion, it is a fixed portion. This is which one? Variable portion. This is known as which cost? Mixed cost. A part of the cost is fixed, remaining part is what? Variable. Another one, step cost, happens because of the capacity. Cost remains constant for a level, then it keeps changing. So step cost will be used to plan the capacity. Whether you have to increase my capacity, I'm manufacturing 5,000 units. Now next month there is an excess demand. Okay, whether I have to go for extra mission or not. If the demand is permanently there will be an increase. Then you will go for what? Hiring an extra mission or purchase an extra mission. Extra fixed cost you'll be ready to spend. The demand is temporary. Just 1 month only the demand will come. Simple, no problem. Let us forego because the fixed cost will keep coming throughout the year. No? So once you increase the capacity, the additional cost, I told it jumps from 1 lakh to 2 lakh. Extra 1 lakh you have to keep pending throughout the year. If the order or demand is only seasonal, you will not increase the capacity. You will run with the existing capacity. You will say no to the seasonal customers or try to increase the price so that the demand is reduced. You are able to manufacture with 5,000 units. If the demand increases permanent, you find yes, the demand is going up, more inquiries are coming, more orders are coming, it is permanent, then you will go for what? Increasing the capacity. So the best example for variable cost is raw material, labor who are paid based on what? Piece rate. Mixed cost, a part is fixed and a part is variable, probably an electricity cost, even salary paid to the salespeople. Salary paid to the salespeople. We'll pay a fixed salary per month, and depending upon the target achieved or volume of sales, a commission will be paid or incentive will be paid. So fixed cost is the monthly salary. And variable portion is which one? The incentive or commission paid to them. Step cost, this is also known as which one? Capacity related cost. Okay, in India, what is the word we use for mixed cost? Semi-variable cost. Semi-variable cost. Okay. So based on behavior, we have done the cost analysis into which cost? Variable fixed cost, B variable cost, C mixed cost, D step cost. Based on this, a lot of questions can be tested. A conceptual question, let me to ask you. You are going to answer. Only when you answer, then I'll proceed, kind of a thing. You must be very interactive for this. Okay. Total fixed cost. Total fixed cost remains constant. True or false? It's a statement, whether it is true or false.
True, sir.
Unit fixed cost is variable. True or false? Unit fixed cost means cost per unit. Fixed cost per unit is variable. True or false?
False, sir.
True. I'll give an example. For example, let us take fixed cost is 5,000. Whatever may be the production, the fixed cost is what? 5,000. Okay. Output. Output means number of units produced. We manufacture 100 units or 500 units or 1000 units or 2000 units. So fixed cost divided by output, if you apply, you will get which one? Unit fixed cost. Unit fixed cost is nothing but cost per unit. What is unit fixed cost? Fixed cost divided by number of units. Is it changing or is it remaining constant? Unit fixed cost keeps changing because the same cost is shared by different number of units. The same cost is shared by different number of units. This question can be asked alternatively. Unit fixed cost or fixed cost per unit remains constant. True or false? False. Why? Fixed cost per unit will keep changing. Fixed cost per unit will keep changing. How this will be tested in IMA? They will give you 3 or 4 sentences. In the sentences, identify incorrect statement. Correct statement like that, they can ask you question. Clear? Total fixed cost remain constant. Unit fixed cost is what? Variable means yes, it will change because the same cost is shared by different number of units now. Unit fixed cost will what? Change. Unit fixed cost per unit, no, it will keep changing. Point number D. Unit fixed cost increases when output increases. The best example is you can see the per unit fixed cost when the output is increased from 100 to 500 to 1000 to 2000. Unit fixed cost, is it increasing or reducing? Reducing.
Reducing.
So false. I request you to take it up along with me. Okay, don't wait for copying, etc. I request you to take it up along with me. It's an alternative way of asking. This is a negative way of asking. This is a positive way of asking. Yes, fixed cost per unit decreases when output increases. True. Unit variable cost remains constant. Variable cost per unit remains which one? Constant. True or false? For example, electricity that we consume, variable portion. 1 unit 15 rupees, 2 units into 15, 3 units into 15, 4 units into 15. Unit variable cost remains constant, true. Per unit it is the same. Total only will change. True. Yes, total variable cost only will change according to output. Per unit variable cost will remain same. Total variable cost will change according to what? Output. Take up this. Point number G. When workers are paid weekly salary, it is a variable cost. True or false? When workers are paid a weekly salary, it is a variable cost. True or false? When workers are paid weekly salary, is it a variable cost or fixed cost? It's a fixed cost. It's a false statement because within the week, okay, 5 days, 6 days, they are paid some wages. Whatever may be the production, the same wages are paid. Sir, one day there is no production. One day there is no more production. One day there is a lesser production. Whether that weekly salary will change? No, it's a fixed cost. Weekly, wherever you pay based on time, it is a fixed cost. Wherever you pay based on time, it is kind of a fixed cost. Like weekly or monthly or yearly, it's a fixed cost. Over on the copy.
Yes, sir.
Next, we use a formula, not a formula. Y is equal to A plus Bx, where Y refers to total cost, A refers to constant. What is a constant? Fixed cost. B refers to variable, nothing but variable cost per unit. X refers to output. Okay, this is a cost function. This is called as which one? How the cost functions. Y is equal to A plus Bx. Using this, there can be question. There can be a question. Shall we? Simple question can be. This is like H in a condition. If fixed cost is $50,000 and unit cost is $2, find, please take it up along with me. Fixed cost given as 50,000. Variable cost per unit is given as how much? $2. Output, there are two types of output, 3,000 units and 5,000 units. So for 3,000 units, fixed cost 50,000 plus 3000 into 2. It will give us 56,000. For 5,000 units, 50,000 is a constant, plus 5,000 into 2. So take up this also. It's a simple question or a direct question. Try to work for this question. They ask you find out what is the fixed cost, variable cost per unit, and total cost for 15,000 units from the following data. Try பண்ணுங்க. You are going to try. Any doubt in the cost function? Y is equal to a plus bx. Fixed cost plus variable cost into number of units sold will give us what? Total cost. For this question, they ask you to find out what is the fixed cost, variable cost per unit, total cost for 15,000 units from the following data. Only when you tell the answer, I can proceed. Please tell the answer. It may be wrong, nothing wrong in it. Tell me the answer for what is the fixed cost, variable cost per unit, and total cost for 15,000 units. Output is given for 10,000 units and what? 14,000 units. This is in dollars. Shall I? Why cost changes? Why the total cost changes? Is it because of fixed portion or variable portion? Because of variable portion. Because of which portion? Variable portion. Okay. Simply, you can work out by shortcut method. Change in cost happens due to change in which one? Output. This will give us variable portion. Change in cost that is happening due to change in output is which portion? Variable portion. There is a change of cost by 1 lakh for a change in output of 4,000. So what is a variable cost? This will give us variable cost per unit. This is the variable cost per unit. Okay. Now let me take the same information. If total cost is this much, less variable cost. Variable cost, we know it will change with output. 10,000 into 25. Like first year, 10,000 into 25. 2,50,000. Second year, 14,000 into 25. 14,000 into 25. So from total
Sir,
cost,
2580, sir.
whatever that changes because of change in output is which cost? Variable cost, right? So variable cost is this much. 10,000 into 25, 2,50,000. 14,000 into 25 is what? 3,50,000. Balance will be fixed cost. Balance will be nothing but which cost? Fixed cost. Out of 5 lakh, 2,50,000 is variable, means balance 2,50,000 is fixed cost. You can find the fixed cost portion remains the same. Fixed cost portion remains what? Same. Whatever may be the output, which cost will remain same? Fixed cost will remain what? Same. I repeat, change in cost by change in output. Change in cost divided by change in output gives you what? Variable cost. So first year to second year, total cost minus variable portion. What is variable portion? Whatever changes with output. 10,000 into 25. You get 2,50,000 and 3,50,000. Balance is fixed cost. So we worked out fixed cost is 2,50,000. Variable cost per unit is 25. Total cost is we need for 15,000 units. Total cost for 15,000 units. Simple. Fixed cost. What is the fixed cost? 2,50,000 plus variable cost. What is the variable cost? 15,000 into 25. So this will become total cost for the 15,000 units. 15,000 plus 2,50,000 plus 15,000 into 25. It's a very good IMA question that can be tested. 6,25,000. This is the total cost for 15,000 units. The question can be asked like this also. The question, next question. For 45,000 kilometers run, total cost of model 1 $20,000, and for 50,000 kilometers it is $21,000. Same for model 2. Same for model 2. Okay, for a 5,000 kilometer run, total cost of Model 1 truck is 20,000, and for 50,000 kilometers, it is 21,000. The same thing in Model 2, that is truck Model 2, 45,000 kilometers, it is total cost is 21,000. 50,000 kilometers, it is 21,800. Find fixed cost, variable cost per unit for both the models of truck. Which model is better if you're running only 10,000 kilometer? Which model is better if you're running 80,000 kilometers? And fourth question is, what is the indifference point? What do you mean the indifference point? You're not able to decide. You're not able to decide. You're given two products. You're not able to choose whether one product is good or second product is good. I'm unable to decide. That is called as which one? Indifference point. Indifference point is the point at which you are unable to decide. When you will be unable to decide? When Model 1 and Model 2 will have the same cost. When Model 1 and what? Model 2 will have the same cost. Sir, Model 1 ponal same cost. Model 2 also same cost. Then you will not be able to what? Decide. Try to work this. Okay. Use this change in cost by change in output for finding out fixed cost, variable cost for both the models of truck. Try to work out for 10,000 kilometers, Model 1 or Model 2 total cost work out பண்ணுங்க. For 80,000 kilometers, Model 1, Model 2 work out பண்ணுங்க. Sir, how to find out variable cost? For Model 1, change in cost by change in output. For Model 2, change in cost by change in output. Separately you have to work out. Separately work out fixed cost for both the model. Then work out cost if Model 1 of truck is used for 10,000 kilometers. Same Model 2 if 10,000 kilometers. 80,000 kilometers work out for Model 1 and Model 2. Wherever the cost is low, we will prefer that particular model. Indifference point. Okay, I'll come to that later. First work out the three things. I'll give you time. Yeah, recorded class students, you can take about 5 minutes of time or 10 minutes of time in answering the question. The first three. Try பண்ணுங்க. Those who are accessing recording, please pause and solve and proceed with the video. First copy this, then take up the question, try to work out the first three question answers. Please remember all these questions are based on which one? Cost behavior. Cost behavior. Try பண்ணீங்களா? Change in cost by change in output for Model 1 and Model 2 you can work out. Change in cost 20,000 to 21,000. That is $1,000 divided by change in output is kilometers here. How many kilometers? 45,000, 50,000 means 5,000 kilometers. It is $0.2 per kilometer. $0.2 per kilometer. Model 2, 21,000 to 21,800. 800 divided by 5,000. 800 divided by 5,000. How much it will be? Change in cost by change in output. 0.16 per kilometer. So, total cost is given to us. What is the total cost? 20,000. Total cost is given for 40,000, 45,000 kilometers and 50,000 kilometers. Less variable cost. How to work out variable cost? Just multiply 45,000 kilometers. Okay, total cost. Okay, kilometers plus total cost. Total cost is given as 20,000, 21,000. There it is, 21,000, 21,800. Variable cost will be at the rate of 0.2. For the first one, it is at the rate of 0.2. So 45,000 into 0.2 will be 9,000. 45,000 into 0.2 will be 9,000. 50,000 into 0.2 will be 50,000 into 0.2 will be 10,000. Same way, it is 0.16. 45,000 into 0.16. Here it is 50,000 into 0.16. So if you eliminate it, you will get fixed cost. Fixed cost of model 1, $11,000. Model 2, $13,800. Fixed cost you can find it will remain constant. 45,000 kilometers or 50,000 kilometers. Fixed cost will remain what? The same. Only what will change? Only what will change? Only the variable cost will change. Here it is at the rate of 0.16. It is at the rate of 0.2. Multiplied with number of kilometers. Multiplied with number of kilometers. So we worked out fixed cost, variable cost per unit for both the models of truck. Variable cost per unit we know. We know fixed cost also. We know fixed cost also for both the models of truck we worked out. Which model is better if 10,000 kilometers are run? If 10,000 kilometers are run, fixed cost will be same, 11,000. Fixed cost will not change. No? Variable cost will change. 10,000 into 0.2 here. 2,000. Here it is 10,000 into 0.16. Which model is better? If 10,000 kilometers are run, which model is better? The model which is having what? Lower total cost. Model 1 will be better. Model 1 will be better. If 80,000 kilometers are run, simple, fixed cost will be the same. Fixed cost will be the same. Fixed cost will not change. Variable cost will change. Total cost. Even here, which model is better? Even here, which model is better? Model 1 is better. Model 1 is better. Okay, let it be 10,000 kilometers or 80,000 kilometers. Which model is better? Model 1 is better. What is indifference point means? The point at which there will be indifference point. Indifference point means the point at which both the options gives you same result. Simple. Total cost is same now. That means how many kilometers at which the total cost will be same. Simple. difference in fixed cost, difference in fixed cost divided by difference in variable cost. Difference in fixed cost divided by difference in variable cost. I will prove the answer also. What is the difference in fixed cost between these two models? 2,800. That is 13,800 minus 11,000. 2,800. Difference in variable cost. 0.2 minus 0.16. 0.2 minus 0.16. 0.04. This will give us the kilometers at which the total cost will be the same. We'll prove the answer also. Why? Wait, before that, if 10,000 kilometers are run, which model is better? If 10,000 kilometers are run, which model is better? If 10,000 kilometers are run, which model is better? Model 1 is better. Why model 1 is better? Because it is having the lower total cost. Look at the total cost, that is low. If 8,000 kilometers are run, if 8,000 kilometers are run, sorry, 80,000 kilometers are run, which model is better? Model 2 is better. Why? You can see the total cost is less. Compared to model 1, model 2's total cost is less. Indifference point means the point at which the total cost will be what? Same. It will be, total cost will be what? Same nartho. Simple. At 70,000 kilometers, the total cost will be same. Difference in fixed cost divided by difference in variable cost. At 70,000 kilometers, it will be the same. Simple. Let us work out the total cost. Model 1 or the total cost. What is the fixed cost? What is the fixed cost? 11,000 plus 70,000 into 0.2. This will give us model 1's total cost. Can you work out and tell me the answer? $25,000. Model 2. 11,000. Clear. What is the model 2's fixed cost? 13,800 plus 70,000 into 0.16. 70,000 into 0.16. You will get the same total cost. So at 70,000 kilometers, at how many kilometers? 70,000 kilometers, model 1 or 2, the total cost will be the same. Model 1 or 2, the total cost will be what? Same. That is called as what? Indifference point. So when you're running 70,000 kilometers, let you go for model 1 of the truck or model 2 of the truck, it will give what? The same total cost. You will not be able to decide whether which model is better. Now, most important decision making, because as a cost and management accountant, you should decide and communicate to the organization which model is better. Simple. If less than 70,000 kilometers are run, if less than 70,000 kilometers are run, which model is better? Model 1 will be better. Model 1 is recommended. If you're running less than what? 70,000 kilometers, model 1 is recommended. Why? Because it will have low fixed cost. Because when you're running at a lesser capacity, better to go with what? The model which is having a lower fixed cost. You can find, if you run 10,000 kilometers, which model is better? Model 1 is better. Why? Because the fixed cost is only 11,000. There it is, fixed cost is what? 13,800. So if less than 70,000 kilometers run, model 1 is recommended. Okay. If more than 70,000 kilometers are recommended, model 2 will be recommended. Model 2 will be recommended. Why? Because it will have a low variable cost per unit. You can check this. If 80,000 kilometers are run, which model is having lower total cost? Model 2 has a lower total cost. Why? Because For every kilometer, here we spend 0.2, here we spend only what? We spend only 0.16. So I repeat the whole process. I request you to listen, then you can take it. Change in output divided by change in cost by change in output will give us what? Variable portion. From total cost, eliminate variable portion, you will get fixed portion. You can find fixed portion of model 1 and model 2. Whatever may be the kilometers run, it remains what? The same. Fixed portion remains what? The same. If 10,000 kilometers are run, we work out fixed cost, add variable cost, model 1 at the rate of 0.2, model 2 at the rate of 0.16, we add, we get the total cost. So if you are running only 10,000 kilometers, model 1 of the truck is better. If you're running 80,000 kilometers, if you're running how much? 80,000 kilometers, then fixed cost plus variable cost, when we add, total cost of model 2 is better. Okay. What do you mean by indifference point? The point at which two options gives you the same answer or same results where you are not able to decide. So difference in fixed cost divided by difference in variable cost gave us 70,000 kilometers. We cross check also. You go for model 1 or model 2, you get the same total cost. Model 1 or model 2, you get what? The same total cost. That is called as what? Indifference point. Simple. If your output is less than 70,000 kilometers, if your output is less than 70,000 kilometers, you're using only limited extent or lesser usage is there now. Go for a model which is having what? Lower fixed cost. Which model? Model 1 will be recommended. Model 1 is recommended because it is having what? Lower fixed cost. If you're running or if you're using very high, then go for a model which will have what? Low variable cost per unit, because variable cost per unit changes according to output. More than 70,000, at 70,000 both are equal. More than 70,000, model 2 if you go, you will spend 0.6 for every extra kilometer. Here you will be spending 0.2. So prefer the model which is having what? Lower variable cost per unit. Please take up this. So these things, the decision making can be done only when cost is analyzed into fixed and variable. Please take up this. First copy this, then I'll come for doubts if there is any. Your recorded class students, ensure that you pass and copy this. Any doubt in this? So we are in the classification of cost. We learned about direct cost, indirect cost. Then we learned about based on cost behavior. How cost behaves, variable cost, fixed cost. Even this example is based on which one? Variable cost, fixed cost. Based on that we decide also. Okay, it is one of the most important cost classification. When we go to the next one, budgeting also we had seen fixed cost, variable cost, semi-variable cost. Okay, in cost in behavior also we see fixed variable and semi-variable cost. In part 2 also there will be an impact of fixed variable and semi-variable cost, because in every organization you find the cost behavior affects decision making, right? For example, when you find simple in a personal life, whether you will go for a diesel car or a petrol car. Diesel car, okay, will have more fixed cost but less variable cost per kilometer. More fixed cost but less variable cost per kilometer. So when you are running for small size, like rarely you take the car and run, you will go for a diesel version or petrol version, because it will have low fixed cost. It will have low fixed cost. Variable cost we are not bothered because we are not using it frequently. But a person who is running a call taxi or a person who is using it for business purpose, daily 100 to 200 kilometers a person will run the car, then they will obviously go for a diesel car, because though fixed cost is more, variable cost per unit will become what? Less. That is why you can find less than 70,000 kilometers, we prefer the model which is having what? Low fixed cost. Best example is this one. When you're using for only 10,000 kilometers, truck 1 or model 1 is better. When you're using for more than the indifference point, model 2 is better. From personal life to business life, not only about cars and trucks, it's about missions, it's about factory, it's about capacity planning. It is about how to choose whether you go for a high rent model, that is high fixed cost model with low variable cost model, or low fixed cost with high variable cost model. You will choose depending upon your output size, capacity, and all. So this is about based on which one? Cost behavior. We learned about all these costs. Shall we proceed? Shall we proceed? Next, based on decision making. This is the third classification. For taking decisions, whether the cost is relevant or irrelevant. But for taking decisions, the cost is relevant or irrelevant. Relevant means yes, we consider the cost for decision making. Irrelevant means don't consider. Okay, we'll see one by one what to be considered, what not to be considered. What about variable cost? What about variable cost? Yes, for every unit the variable cost comes, we'll consider. Whether to manufacture the next unit or not, you will consider which cost? Variable cost. Why? Because for every unit that I spend extra, I should get extra revenue. At least the selling price should be more than what? Variable cost, so that yes, variable cost will be considered. Common fixed cost. Common fixed cost means the cost that will not change with output. Yes, we don't consider. Why? Whether you run the production or not, whether you shut down or run, that fixed cost will come. It is irrelevant. Third one, specific fixed cost. Specific fixed cost means the fixed cost will come only when you run the production or that output or object or department. Okay, if you don't run it, that cost will not come. Na? Yes, it is relevant for decision making. For example, you are running a car manufacturing company. General rent or general administration expense and all, common fixed cost not relevant for decision making. For example, you want to manufacture tires within the factory. You want to manufacture tires within the factory. That component, the tire manufacturing will have fixed cost and which one? Variable cost. If you manufacture tires, that fixed cost will come. That fixed cost for manufacturing tire will come. If you don't manufacture, that cost will not come. So is it relevant or irrelevant? It is relevant. Specific fixed cost is which one? Relevant. There is something called as opportunity cost. Opportunity cost is nothing but profit foregone. Sir, if I had gone for the other alternative, I would have got this much. I'm sacrificing this and coming for this alternative. That is called as what? Opportunity cost. For example, there is a material available. Okay, customer X is asking, customer Y is asking. The same material we are going to use and the material available is only that much. If you would have supplied X customer, okay, we would have got a profit of $10. That is opportunity cost while charging for customer Y. So if customer Y gives more profit than customer X, then you will consider which one? Giving the order. Again, you have to see whether Y is a one-time customer or repeated customer, first-time customer or regular customer. So other factors also should be seen. But opportunity cost is always relevant for decision making. Yes. One more example. For example, you want to start a business. You're asking your father or grandfather to withdraw the deposit and give it to you. He is having bank deposit. You're asking your grandfather to withdraw the deposit and give it to you for starting business. What is the first thing they will ask? Whether the business is good, is it safe, etc. The second thing they will ask is, in bank I get 7% interest. Will you be giving me at least that 7% interest? Simple. Opportunity cost of using the bank deposit is 7%. I lose 7%. That I should get it in the form of business profit. Clear? So the profit foregone from the next best alternative, we will always consider for which one? Decision making. Okay. Next we call it as notional cost. cost assigned. For example, I come to your work. There is an interior decoration order. There is an interior decoration order. I do it by myself at your office. I'm the labor. I'm the owner. Okay. When I come to you, I'll put material charge. I'll put X, Y, Z material charge. Plus, I will put labor charge. Am I paying to somebody? No, I'm not paying to somebody. I put labor charge for myself. Clear, on a rational basis. If somebody else is employed, how much is the labor cost? For that, I put it. Apart from that, I will add profit also. But material plus labor that I put, that is not an actual cost. That is called as which one? Notional cost. That is called as which one? Notional cost. Clear? Cost assigned on rational basis, yes, it will be considered. Please remember, these things are called as non-cash cost. Opportunity cost and notional cost are called as which one? Non-cash cost. There is something called as sunk cost. Amount spent already, which cannot be recovered, which cannot be amount spent is spent. You cannot take it back. You cannot take it back. Now that is called as which one? Sunk cost. Like amount spent on research. You spent money. Can you recover it? Product is successful or unsuccessful depends upon so many factors. Okay. Amount spent on research, you cannot. Amount spent on marketing, can you get it back? Can you get back that money? No. But amount spent on plant, machine, land and all, yes, I can sell it and get it. But what about amount spent on advertisement, research, marketing and all? Can I get it back? No. So there is called as which one? Sunk cost. Sunk cost is not relevant for decision making. Okay, 10 years back you purchased a machine. 10 years back you purchased a machine for, let us assume, $1 lakh. Today the machine is working, but everybody moved to an advanced machine. Everybody moved to an advanced model of a machine. What about the amount spent in the old machine? Nobody will buy it. If you sell it today, nobody will buy it. Sunk cost. Why sunk cost? Because there is the latest technology available. Okay, you have to buy it and use it. So what about the amount spent in the past? Sunk cost. Can you recover it? No, you cannot recover it. Whether you continue with the machine or not, that cost cannot be recovered. If you continue with the machine, it will spoil your production, it will spoil your output, or customer may not buy your product. Okay. Because always, for example, you purchased an analog camera, not digital camera, analog camera about 20 years back with film rolls, etc. You spent about maybe $5,000 in purchasing the camera. Camera is working, but people have moved to digital world. Can you say that I spent $5,000? Now digital cameras are available for $1,000, $1,500. Okay, but I spent $5,000 20 years back. Can you hang on that? No, you'll be hanging yourself. Okay, so sometimes sunk cost, if you try to recover, you will try to overcharge your customers, or you'll use old product or old machine, old technology, where customer will move away. Some people keep on okay, talking about sunk cost. I spent this much, I spent that much, like that. For example, you started a tea shop, you spent too much money on interiors, lights, hangings, okay, the designs, chairs, tables, you spent so much money. Whether you run or close, is it possible to recover that cost? Selling the product is different. It depends upon the quality of tea, customers that you serve, the location of business, and various factors. Okay. What about the money spent in the interiors and all? Can you split it and sell it? No, it will not go for any scrap rate. Okay, not even a small scrap rate it will fix. Even while removing and throwing, you have to spend extra cost only. So amount spent on interiors, amount spent on marketing, all these are which one? Sunk cost that cannot be recovered. That cannot be recovered. So that is irrelevant for decision making. Otherwise, your tea price should not be based on your sunk cost. Tea price should be based on the ingredients, the quality that you give. Based on that only the customer should be charged. Many people spend so much on interiors, but the quality of the tea will be bad, or quality of food will be bad. You can find finest restaurant which is having wonderful interiors, no customers. Why? Because food taste will be poor. Okay, you can find there's a local roadside street food shop, heavy crowd. Why? Because the quality of food may be good. Clear? So the sunk cost is one which is not relevant for your decision making. Committed cost. Cost already committed. That cannot be avoided for some time. For example, you paid insurance for your shop, you paid insurance for your business, loss of stock, loss of profit, and all. Whether you run the business or close the business, can you get back that insurance premium? If you run the business, you may enjoy benefit if there's a loss of stock. If you close a business, for example, last month only I took insurance for stock, insurance for profits and all. Okay, next month I'm going to close down the business. Will I be able to get back the insurance premium paid? No. So that is irrelevant for decision making. That is irrelevant for decision making. Cost is already committed. That cannot be avoided. Or for example, you signed a rental agreement telling that you will give 3 months notice to the landlord. To vacate, you will give what? 3 months notice to the landlord. So whether you run the business for next 3 months or close down the business today, what cannot be avoided? That cost committed cannot be avoided. So that is not relevant for decision making because it is already committed. Whether you run or not, that outflow cannot be avoided. Shutdown cost. Okay. Cost even if the production if the production is stopped also, you have to keep spending the money. Certain minimum amount you have to spend the money. Yes, it is relevant. Why? Because if you run the production, the loss will be 2 lakhs. Selling price minus cost, the loss will be 2 lakhs. If you stop the production, you have to clean and maintain the asset. You require a security. You have to pay rent till that factory is disposed. You have to pay what? Rent, or you have to pay certain minimum amount. The expenses will be 3 lakhs. The expenses will be 3 lakhs. When you run sales minus various expenses, what is the loss? $2 lakh. If you shut down, the expenses will be 3 lakhs. Will you run or shut down? If you run, losses 2 lakhs per month. If you shut down, losses 3 lakhs per month. So it's better to run the business. Okay. So shutdown costs are relevant for decision making. Relevant means yes, we will consider for decision making. Okay. Out of pocket cost means I have to spend cash. If I have to do something, yes, sir, I have to spend it in cash. Yes, definitely I will consider. Before spending $1 from the company's bank account, you will think whether it is relevant or irrelevant. Clear? So amount that requires cash spending, definitely it is required which one? Relevant. It is relevant for which one? Decision making. Please remember, variable cost is relevant. Common fixed costs are not relevant. Specific fixed costs are relevant. Opportunity costs are relevant. Notional costs are relevant. Sunk cost, amount spent already, but cannot be recovered, that is irrelevant. Committed cost, cost is already committed, but it cannot be avoided. Yes, it is relevant. Irrelevant, okay. Shutdown cost, if the production is stopped, also you have to spend the money. We'll decide based on how much loss if we continue the production, how much we have to spend if we stop the production. If we find loss is lesser than stopping the production and spending that money, we'll continue the production like that. Out of pocket cost, you have to spend which one? You have to spend the cash that cannot be avoided. That cannot be avoided now. That is relevant for what? Decision making. So this is the classification based on which one? Whether it is relevant to decision making or what? Irrelevant to decision making. Okay, please remember, please note in IMA terminology, they use the word imputed cost. Imputed cost includes cost that is not having cash outflow but relevant for decision making. Example, we had seen already point number 4 and 5. What is point number 4 and 5? Opportunity cost and which one? Notional cost. We don't spend money. We don't actually spend money. That is not having a cash outflow. That is not having a cash outflow, but they are related or relevant for which one? Decision making. They are relevant for which one? Decision making. Yes. Sometimes they ask the cost. What do you mean by imputed cost? Cost that is not having a cash outflow. Opportunity cost and notional cost. They are not having cash outflow, but relevant for decision making. This is also known as implicit cost. Okay. Implicit costs are nothing but which cost? Implicit cost is nothing but which cost? Imputed cost. Otherwise, the cost that is not having a cash outflow but is relevant for which one? Decision making. This is called as which cost? Implicit cost. Explicit cost. Simple. Cost that requires cash outflow. It is also known as which one? Out of pocket cost. So both explicit cost and implicit cost are decision making. The out of pocket cost is known as which cost? Explicit cost. This is also relevant for decision making. And imputed cost such as which cost? Opportunity cost and which cost? Notional cost. Both of them are relevant for decision making. So decide based on what? Both explicit cost as well as which one? Implicit cost, which are definitely relevant for which one? Decision making. Okay, so this is highly useful when you are running a business or when you are working for a business to decide on whether to consider that cost or not, This is cost classification based on which one? The relevance to decision making. Okay, so today we learned about the three classifications of cost. One is based on relationship, direct and indirect. Second is based on what? Behavior, variable, fixed, semi-variable, that is mixed cost and step cost, like that. We had seen the cost that is relevant for decision making and which one? Irrelevant for decision making. In cost classification, we are going to learn about which one? Grouping of cost, how the costs are grouped for the purpose of control, how the costs are grouped, then how the costs are assigned, and how the costs are decided. That we will see tomorrow or in the next class. Please take up this. So tomorrow we'll continue with grouping of cost and working out cost for different products.